Hi there, Serial Trader here. Let's have a look at the major U.S. indices heading into this coming week. And certainly no question that the downtrend is still in full force. Now, definitely good confirmation here too that we are in a larger third wave. Things are accelerating to the downside. We have this channel that I've drawn here. Where if this was just an A, B, C down, you'd expect it to basically bottom out around this equality area and also stay largely contained within this channel, at least on a closing basis. And you can see here, whether on an intraday or a closing basis, we've convincingly broken out of this channel and closed below it. So even with just a close-only chart, you can see we're losing that channel, breaking right out of it, right? So that's kind of visual confirmation that this is a one down, two up, and now wave three in progress. And also the subdivisions here on this wave three wave. So we got our one down, two up, and then a 1, 2, and that implied a third of a third, which is a strong price move. Well, we've certainly had that price confirmation of that third of a third move down, as we've been accelerating to the downside as we broke down. At this point, it looks like at least a small degree wave 4 bounce is due at any point here. But the real key message here is that this is not just a simple pullback or correction. This is a little more sinister. It looks like we're really shaping up for a 1 down, 2 up, 3 down, 4, 5. And that'll just be the initial impulse move down of a larger decline, okay? Now, it looks like wave 3 is not done yet. I still like this 1618 area in the 2200s as kind of a Fibonacci area to look for. Shorter term here. So on our, I have these. This is a minor wave 1, 2, and below minor, the degree I have here is minute. So I expect a minute wave 4 pretty soon here. I'm not trying to say, oh yeah, we got the bottom here right around 2400. It's possible. But whether we have the bottom now or, tomorrow or sometime next week, I do expect a fairly sizable minute wave 4 rally pretty soon. And then, another impulse wave down to complete minor wave 3, and then an even larger degree wave 4 rally, and then a, wave 5 down to complete that larger intermediate degree wave 3, and then a larger degree, intermediate wave 4 up. That's getting a little ahead of ourselves here, but the point is that from a trading perspective at this point, you should be looking for some sort of strong counter trend rally. At this point, trying to chase down in these extreme conditions is not advisable. If you're short, certainly no reason to close the trade yet, but certainly watch it carefully. Doesn't look like a good place to establish a new short, and actually, if you want to get long, looks like we're approaching an area where that will be a decent trade fairly soon. We are now again deeply oversold on the daily RSI, so we're at 22 on the daily RSI. I believe on the weekly we're actually almost oversold on the weekly RSI, and just to give you an idea of how extraordinary that is, the last time we actually got oversold on weekly RSI, okay, here we slightly did, and that was near the bottom in 2011, which was a pretty good decline in itself. So we're right around those levels here. But the last time we got really badly oversold on weekly RSI, that was the that decline 2008, 2009. Looks like that actually occurred in the fall of 2008, and then we had a bullish divergence, made a new low in price in 2009. So it is extraordinary to get oversold on the weekly RSI here on SPX, and we're right there basically tying 2011's levels roughly. So that's interesting. On the 4-hour, we're oversold on the 4-hour RSI, and that has, even throughout this decline we've been in, that's provided pretty good bounces off of that. They weren't lasting bounces, obviously, but bounces nonetheless, significant bounces that certainly can be traded. So we're approaching that level again, oversold 4-hour RSI, I believe on the hourly. Yeah, definitely oversold hourly, and just bouncing in and out of that oversold condition on the hourly. So things are looking ripe for at least a shorter term counter trend rally. So that's what I'm watching for from a trading perspective. Okay, so that's probably good for pointing out where things are at with the wave count. I'll go to the thinkorswim candlestick chart now. So from a candlestick perspective, certainly no buy signals here yet. We're well below the T line and the 3T line. Everything's in bearish alignment. At this point, how many days down in a row have we had? I think this may have been a slightly positive day on a closing basis, but the point is it's looking pretty extended short term to the downside. Now, just a quick note, tomorrow is a abbreviated trading session. I think it only trades until noon instead of 4 p.m. and then it's closed for Christmas. So I don't know, tomorrow, who knows what kind of move you'll see tomorrow. It might be pretty flat, you know, could be just low volume, low volatility, although I wouldn't hold my breath. The way things have been acting lately, we seem to be defying most of the seasonal tendencies. But that being said, I don't expect anything too substantial tomorrow just because it is a shortened trading session and all that. But we'll see. I'll still be watching, not necessarily acting, but certainly watching. Now, okay, on a weekly chart here for SPX, let's see how the candlesticks look. Real ugly on the weekly. You can see we're cleanly breaking out of that trend channel on a closing basis on the weekly. So definitely a visual confirmation of a more sinister downtrend being kicked off here. Certainly no weekly buy signals or anything. We'll look at the monthly again once we actually close the month out here. So that's kind of where we're at for SPX. Yeah, obviously bearish, but certainly shorter term looking for you know, possibly a substantial counter trend rally. Definitely a good place to be looking to close your short positions or your puts, and you know, consider establishing you know, a quick long. Don't try and, you know, think you're getting a bottom that's going to rally for months on end when you get it. Be ready to close your long trade if you attempt one sooner than later. Okay, so that's SPX. We'll go with the Dow Jones Industrial Average daily. Same story here. Very overall bearish that we broke out of this channel and closed out of it nicely. But again, on a shorter term basis, certainly looking extended. Could bounce anytime. No buy signals yet, though. Well below the T line and the 3T line. The Dow very much in its death cross now. It was the last one to do it, but now we do have a confirmed 50 crossing below the 200 here on the Dow. Now on the weekly chart for the Dow, anything remarkable here? No, just a big red week. Well below the weekly T line and 3T line. Closed well below this channel that we had been in. So that's, again, visual confirmation that we got a 1, 2, 3 in progress. Does not look what you'd like to see for a wave C. Wave C should be, you know, shallower in slope and you know, basically go near that equality relationship and stay within this channel. It did not do that. So we do have a likely 1, 2, 3 down in progress on the bigger picture wave count. So that's the Dow. Basically, you know, similar wave count to the S&P. They're all looking very similar, highly correlated at this point. NASDAQ composite, and the NASDAQ composite also breaking out of its channel and closing below it. But interestingly enough, so I've done the equality relationship. So this is our initial 5 down. Then we had our ABC up, running flat, and now we're working our next leg down. The equality relationship for the NASDAQ didn't even quite hit it yet. It would be at 62.7604. But that being said, this still looks like it's a wave 3 because we are accelerating, has a sharper slope than our initial move down, and I expect by the time this wave 3 is actually done, we'll be well past that equality relationship. And you know, we're clearly breaking out of this channel, so that's good visual indication that it is a wave 3, not a wave C. But again, on a shorter term basis, if we have a little 1 down, 2 up here, and this is our 3 of 3, expecting some sort of, smaller degree wave 4 rally here anytime now as well on the NASDAQ. Now on the weekly for the NASDAQ, yeah, nothing remarkable there. Just below the weekly T line, below the 3T line. Closed out of that channel on the weekly. I mean, it should be no question looking at this chart that we have changed that trend. It's no longer an uptrend, okay? It's now a downtrend in progress, so just keep that in mind. Okay, that's good for the NASDAQ composite. And okay, let's go to the VIX. So on the VIX, we actually have VIX confirmation that we're in a third wave at this point. So that initial VIX spike we had down from the October decline, we've exceeded that now. So if we are in a third wave decline, which certainly appears we are, you expect VIX to get higher than it did in wave 1. We've now done that, so both on a closing and intraday basis. So intraday we got as high as 31.35 on VIX. We closed at 30.11. So we've closed above this previous spike and gotten above it intraday. So VIX confirming that we're in a third wave down, and VIX certainly reestablishing its own uptrend here. And I don't know what level we'll see VIX spike to when wave 3 hits its extreme there, but it wouldn't be surprising to see it, in the 40s or 50s possibly. If you look back, we hit just over 50 on that flash crash in February. So it wouldn't be surprising to see something around those levels again before wave 3 is over, but we'll see. The minimum expectation was that we'd exceed this initial VIX spike, and we've done that. So VIX is confirming there. Now I'll go to the VIX VVIX tool. Now we are starting to see a divergence. So you see on this 30-minute chart, VIX has made a higher high, while VVIX has made a lower high. And okay, so that's the first step we look for as far as a buy signal. So we've got our divergence between VIX and VVIX. Now we want to see VVIX go below its moving average, and we simultaneously want to see SPX get above its moving average. And at that point, that'll be a confirmed buy signal using this tool. Now, of course, it'll be a little late, waiting for the confirmation of SPX getting above the moving average, but at that point, you can be confident a more substantial bounce is in play. Of course, as a trader, you want to try and front run those things, get in early, but it's nice to see it confirmed with this tool. So we have the first step in the process. We have our divergence. Now we need to see the cross of the moving averages to get a confirmed buy signal. So I thought I'd point that out. Okay. Now, as far as me, this next week, I'm not sure how trading is going to unfold. It could be pretty thin. It is a holiday week. We've got some holidays in there, and tomorrow is an abbreviated session in itself. So not looking to do anything too crazy. If I see some sort of legitimate buy signal, I'll close the March 290 SPY puts, and then possibly think about getting into some shorter term long positions. But we'll see. Definitely just going to be watching tomorrow, and depending on what I see, I may pull the trigger on something, but I won't be going too heavy either way. All right. Probably do some sort of update, once we resume trading after Christmas there. So, Merry Christmas, everyone. Serial Trader signing off.